Okay, so Sydney and Melbourne are in negative growth rates. So this is the first time that's happened, and it's a 0.2% deficit for Sydney for the last month and a 0.1 deficit for Melbourne. So that's very interesting, but their quarters are still showing a positive quarter, 0.3% growth for the quarter, 0.1% for Sydney, 0.1% growth for Melbourne. Annual growth is still showing obviously good growth, 17.7 for Sydney and 9.8 for Melbourne. But take note, as the months continue, I would say in the next 2 to 3 months, obviously we'll continue to show the negative growth rates per month. The quarterly growth rates will start showing negative growth rates, and the annuals will start showing a lot less. And that will affect the 5-year average and those type of things. But interesting enough, median house price in Sydney, 1,116,000, and Melbourne is 805,232. So obviously we go with the CoreLogic stats. I know there's another median house price floating about with another mob, but we follow the CoreLogic. So if you're quoting figures to your clients, make sure that you quote CoreLogic's figures, and that's the ones that most of the real estate industry use. Okay, so Brisbane, 2% growth, so still flying high, 6.4 for the quarter, 29.3% annually. So if you've invested in Brisbane when I told you to a year ago, you'll be very, very happy with that. I know Daniel Ferrugia did, so well done, Dan. 749,000 is the average growth rate for Brizzy. Adelaide still chugging along really well, 1.9% growth for the month, 5.7% for the quarter, annually 26.3, awesome, with 602 average sale price or medium house price. Perth, 1% growth. So we had 1% growth in February, we had 1% growth in March. So that is pretty awesome. I still think we've got a lot more growth in us. And I think it's just going to take time before that whole border open thing sort of gets it. I know because my dad's arriving from South Africa tomorrow. Yeah, after 2.5 years. That's why I'm also celebrating. Very exciting. But I know there's literally thousands of people wanting to come into Australia. So it'll take months before that all sort of unravels. And we'll probably see some better growth rates in Perth than 1%. But, you know, I mean, if you take a 1% growth rate in 12 months, that's 12%. And I think it's more likely to be 15 to 20, but I'm optimistic and I'm biased. But Perth is now showing a positive growth rate, quarter 1.9 and annually is 7% annually, which is actually very low. So that we are hoping gets up to that 15 at least mark. And then I think we have at least fared moderately against the other major cities. Okay, so let's go to combined capital cities. A 0.3% growth in capital cities, so that has come down. 1.5% quarter for capital cities, that's also come down, and 16.3% combined capital cities, which has come down. Regional, still going really strong regionally. So for our Mandurians and regional people, you know, 1.7% last month, 5.1% for the quarter, and 24.5% for the year growth. Combined regional. And the one that you really need to take a lot of heed of is, of course, the national. National are down 0.7 for the month. So it's positive 0.7% for the month, 2.4 for the quarter, 18.2 for the 12 months. Interestingly enough, the median house price in Australia, 738,975. And little old Perth is sitting at 542,000. There's only one city that's actually lower than us, and that's Darwin. Now, for those of you who've been to Darwin, it's a lovely place with a few good pubs, but compared to Perth, oh my God. So $494,000, the median house price in Darwin, and Perth is 542. I mean, even Canberra is 932, and Hobart is 731. So for those Perthians in the crowd today, I'm sure you can see that there's definitely some growth still to come there. All right, so let's see what Mr. What's his name? Tim Lawless says from CoreLogic. All right, so Australian smaller cities drive the growth in national housing values as Sydney and Melbourne decline. CoreLogic National Home Value Index was up 0.7% in March, a subtle increase of on the 0.6% lift recorded in February. Brisbane, Adelaide, Perth, and the ACT, along with several regional areas, offsetting a slip in values across Sydney and Melbourne. The first quarter of the year has seen Australian dwelling values rise by 2.4%, adding approximately $17,000 the value of an Australian dwelling. So the average rise in an Australian dwelling for the first quarter was 17,000, a great stat. If you're looking for stuff to talk to your clients about, if you're looking for something as a prospecting letter, there it is. The first quarter of the year has seen Australian dwelling values rise by 2.4%, adding approximately 17,000 to the value of an average Australian dwelling. A year ago, values were rising at more than double the current pace, up 5.8% over the 3 months to March 21, before the quarterly rate of growth peaked at 7% over the 3 months ending May 21. So it is coming off the boil. There's no doubt about it. We'll talk about that in a second. So Sydney growth rate is showing the most significant slowdown, falling from the peak of 9.3 in the 3 months to May 21 to 0.3 in the first quarter of 2022. CoreLogic Research Director Tim Lawless says, while the monthly rate growth was up among some cities and regions, there is mounting evidence that the housing growth rates are losing momentum. There are a few exceptions to the slowdown, with regional South Australia recording a new cyclical high over the March quarter, and some momentum is returning to Perth market, where the rate of growth is once again trending higher since WA reopened their borders. No guesswork there. With the softening in market conditions, the national annual growth rate, 18.2%, has fallen the 20% mark for the first time since August last year, after reaching a cyclical high of 22.4 in January 2021. National housing turnover is also easing, with preliminary transaction estimated for the March quarter tracking 14.3% lower than the same period in 2021, but still 12.2% above the previous 5-year average, which is very interesting. So it's still going very, very strong, but there is obviously signs of, with Sydney and Melbourne dropping, that it's only a matter of time before we all start showing, and you'll see New Zealand, how they've turned the corner from previous months that we've recorded and spoken about. Regional Australia continues to show more resilience to the slowdown. Let's look at stock levels. So advertised inventory at a national level is tracking 30% below the previous 5-year average over the 4 weeks ending March 27. In Melbourne, total advertising supply was 8% above the previous 5-year average towards the end of March, while the number of homes available to purchase in Sydney has virtually normalized to be 7.5 higher than a year ago and 2.6 below the 5-year average. So still slightly behind, but it's certainly normalizing. With higher inventory levels and less competition, buyers are gradually moving back into the driver's seat, but not in those other cities. That means that more time to deliberate on their purchase decision and negotiate on price. And I've got a lot of clients who are already seeing this, and so this is evident. While high inventory levels are less competition, buyers are gradually moving back into the driver's seat. We mentioned that. So Brisbane and Adelaide remain more than 40% below the previous 5-year average levels, around 20 to 25 down on a year ago. So that's huge. It's a similar scenario across regional Australia, where total advertised housing stock was 22% below last year's level, 43% below the previous 5-year average. So stock levels, it's a two-speed market, Sydney, Melbourne, and then regional and Adelaide, Brizzy, and Perth are still going great guns, and that will take time. We just don't know how long. All right, let's look at rentals. Rental trends are becoming increasingly diverse across Australia. At a macro level, rents are still rising at well above average rates. While annual growth rates has eased from a recent peak of 9.4 in November last year to 8.7 over the 12 months ending March 22. The quarter pace of growth has rebounded, although the first quarter of the year from 1.9 in December 21 to 2.6 in March 22. The rate of growth in unit rents has strengthened to reach a cyclical high of 3% in the March quarter. So through the pandemic to date, capital city house rents have risen by 13.8% compared to 3.4% in units, Mr. Lawless said. All right, so just in sort of to wrap it up, the housing market is in a multi-speed way. At the end of the spectrum, Australia's two largest cities, Sydney and Melbourne, are recording flat to failing housing values. Brisbane, Adelaide, growth continues. So despite the diversity, the outlook of housing remains skewed to the downside, they're saying, but they've been saying that for about 12 months. Okay, so this is the reason: rising risk, rising fixed terms of mortgage rates, and the prospect of higher variable mortgage rates later this year. I've sent everybody on Facebook the REB, the banks have put the interest rates the same, so that's for another month. So, but that will definitely ease up later in the year, and they will increase the interest rates for sure, no doubt. Affordability with housing values rising so much more than incomes over the past years. That's the threat on the housing market. Inflation, higher cost of living are also likely to weigh on housing demand, less disposable income, and lower household savings. Higher supply, both newly constructed dwellings and a rise in advertised listings. Sentiment, consumer confidence has taken a turn for the worse over recent months, with the weekly reading from ANZ and Roy Morgan falling to the lowest level in 18 months. However, the other factors that should help the offset of the downside risk, obviously a strengthening of the economy, low jobless rate, and rising incomes growth. This should help keep the floor under the housing demand and keep the number of distressed listings to a minimum through a downturn. A new round of incentives for first home buyers, which we'll talk about in a second. Additional support for first home buyers, the form of extension to low deposit home loan guarantees, and a return to migration. And that's probably a big one, although that will probably start more so in the rental market and then flow over to the sales side of things as well. So so just in conclusion, guys, if you're in Sydney and Melbourne, you're already experiencing a slowdown. What does that mean? It just means that stock's going to be easier to come by, which is a very big positive for a real estate agent. Vendor management is going to have to kick in pretty swiftly. I'm already talking to our Sydney and Melbourne clients about vendor management, vendor reports, rules of engagement meetings, getting brushed up on your vendor management scripts when you're talking to them, making sure you're doing weekly vendor management calls. So that's an absolute must. All right, if you're in Brisbane, and that goes for New Zealand as well. So New Zealand is probably worse than Sydney and Melbourne, which I'll go through quickly in a second. But if you're in Perth, Brisbane, or Adelaide, well, happy days. We've still got a buoyant market and make hay while the sun shines. The only problem is lack of stock. Well, what does that mean? Hit the phones, hit the doors, whatever it takes just to get in front of people, shop your buyers around and just get the stock that you need. Okay, so let's have a quick look at NZ. regional differences showing through as the property market downturn sets in. So there's a set in, obviously, a lot deeper than even Melbourne and Sydney. Shows the New Zealand property market is weakened further as the power shifts to buyers. The national measure of housing prices flattened out in March, 0.7%, a further drop from the February reading of 0.8% and lowest monthly rate of change since the weakness which followed initial COVID enforcements. Okay, so let's have a look at their. So New Zealand, 0.7% growth for the month, a quarter 3.6, an annual 23.4. But every city in New Zealand, bar Auckland, showed a negative growth rate. So Hamilton, 0.9, Wellington, 0.8 negative, Christchurch, negative 0.2. Interesting enough, Auckland's average house price is $1.520 million. New Zealand's average house price is $1,043,000, which is gobsmacking. And Wellington average house price is $1,128,000. I mean, those are just absolutely insane. Perth, 1,034 sales last week, down 10% from the week before. So it doesn't really say why. What happened last week? Was there a public holiday?
In Melbourne, I think.
No, I'm talking about Perth.
Perth, no.
So that's interesting. However, there were 7,790 properties in Perth at the moment, which is also down 1% from the month before. So even though the sales have dropped 10%, not a lot of people are bringing their properties to the market. So that's going to continue that rise. So that's not a train smash. Slight increase in property available for rent, 9% up to 2,365 properties. But all in all, we've got 10,000 properties available in Perth. So still a very, very buoyant market for Perth.